Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now let's look at the bear call ladder. So what is the bear call ladder? This is another name for the short call ladder and is an extension of the bear call spread. So this is not a bearish strategy. It is implemented when one is bullish. It is usually set up for a net credit and the cost of purchasing call options is financed by selling an in-the-money call option. So some of the characteristics of this are so the maximum loss here is limited and the lower strike price minus the medium strike price plus the temporary loss will give you the maximum loss that can possibly happen. The temporary loss that could occur is net credit. The maximum profit is, however, unlimited. There is a time decay, and it has a positive effect on the value when the position is profitable and a negative effect when the position is in a loss making. Next, let's look at the lower break-even point. This is given by the lower strike price minus the net debt, or you can add the net credit. Next, let's look at the upper break-even point, which is calculated by the higher strike price plus the maximum loss. So, how to choose the bear ladder strategy? So, why should you choose it? Because it gives enough time for the underlying asset to move and makes the position very profitable. And this strategy can be applied preferably through a medium to long term to expiration. And you're not supposed to destroy the long options in this. And when should an investor apply this? So when an investor is moderately bearish on the stock index, investor expects the underlying to fall in the short term, but over the long term is expecting it to go higher or in the upward trend, then you can apply this strategy. So how to set up a bear call ladder strategy? So the bear call ladder is a three-legged option strategy. They're usually set up for a net credit for the same underlying instrument with a higher exercise date and price and for the same expiry date. So as we can see here, we can see a prediction of how the stock price might possibly move when you apply the bear call ladder. There might be a small loss, the temporary small loss, and then it will break even and it will go on a higher trend. So first thing to do when you select options in this for this strategy is select options with good liquidity. The open interest should be at least 100, preferably 500, and the lowest strike price should be in the money. The middle strike price should have one or two strikes above the lower strikes, that is further on the money or out of the money. Next is the highest strike price, and this should be above the middle strike price, that is even further out of the money. So, the benefits of the bear call ladder include unlimited potential profit and a limited loss potential. The disadvantages of this are, however, that it can be a net debit investment and the strategy is uncertain. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robot trading software for free.